Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. And today's contract tip has to do with the RE Forms purchase and sale agreement. And the question has come up, are there any unilateral rights to extend a closing if the parties are binding under the RE Forms contract? So if you are well versed in the GAR purchase and sale agreements and the RE Forms purchase and sale agreements, then you will understand the differences. And just parenthetically, Maximum One hosts classes in both sets of contract forms. So I suggest every agent in the Metro Atlanta area do take classes on both sets of forms so that they are well versed on both sets of forms and can help their clients understand the benefits and features of both contracts. But back to the question. So under the GAR purchase and sale agreement, there is a provision that either party may unilaterally extend the contract. Unilaterally, of course, means only requiring one party's signature. Either party may unilaterally extend the contract for 8 days, given certain specific issues that come up. That has to do with the GAR, Georgia Association of Realtors contracts. So if the parties, however, are binding under the RE Forms contracts, there is absolutely no right for either party to unilaterally extend the closing. A closing must be extended by amendment. Then the question comes, well, what about TRID? What about the Consumer Financial Protection Bureau and the TRID laws, or Trade and Lending RESPA integrated disclosure laws? One of those laws states that it is illegal, it is against federal regulation for a lender to close a contract for purchase and sale for real property if that lender has not sent out a very specific set of disclosures to the buyer at least 3 days prior to closing. And we lovingly refer to those as the TRID disclosures. So the issue is, it's illegal. The lender just cannot close the loan. So what happens in that situation if the parties, if the buyer and the seller are binding under the RE Forms contract and you find out that the lender hasn't sent out those notifications, for example, what happens? What do you do? Well, that is provided for in the RE Forms standard terms, which is part of the purchase and sale agreement. I've done a whole nother video series on that, but I definitely strongly suggest that every agent print out and attach the standard terms if you go binding under the RE Forms and reference it as an exhibit. But anyway, to the point, under paragraph 6.3.2 in the standard terms of the RE Forms, it does say, if Fannie Mae, Freddie Mac, FHA, USDA, or VA underwriting guidelines mandate compliance with any underwriting criteria expressly contrary to the provisions of the contract, those provisions shall prevail and be binding upon the parties hereto. Provided, however, that if any of these guidelines result in an increase in cost or expense to the seller or affect the date of closing. So here we go. In my example, if the lender hasn't sent out the TRID disclosure, so that would affect the date of closing. Then, so if anything in the underwriting criteria, which would prevail, affect the seller's expense or the date of closing, then the seller, at the seller's sole discretion, shall have the right to unilaterally terminate the contract within 3 days of the seller's receipt of the notice of the applicability of such guidelines. In such event, the seller may terminate the contract by delivering written notice of the termination to the buyer, which termination shall release both buyer and seller from any further obligations or responsibilities to each other. And if the seller, however, does not terminate the contract, the seller is deemed to consent to those changes that are mandated by the underwriting guidelines. So what does all that mean? So it's a little bit, the way the verbiage reads, you have to read it carefully. The seller has the unilateral right to terminate, not to extend. But the seller may only do that after having received notice from the buyer. So even though it comes second in that clause, the buyer first must send a written notice to the seller. So basically, the buyer's going to find out that they cannot close on time per the closing date in the contract due to, again, for example, the lender not having sent out the TRID disclosures. Therefore, that is an underwriting guideline that does affect the date of closing. That's just an example. There are other examples. So first of all, what has to happen is the seller is required to send written notice to the seller that says, per standard underwriting guidelines, the seller cannot close on the closing date. The lender needs to close on such and such date. So it's no specific number of days. It's whatever date the lender would need to close the transaction, and of course that the closing attorney can get you scheduled. So that would be in the written notice. Once that seller receives that written notice, then the seller has the unilateral right to terminate the contract, but they must exercise that right. The seller must exercise that right to terminate within 3 days, 3 calendar days now, after receiving written notice of the extension. If the seller does not terminate, then it is deemed that the seller agrees to the new closing date. Then it goes on to say that, well, no, that's it. That's it for the closing stuff. Changes in the closing date. So again, a little bit different verbiage from the GAR contract. It does allow for any underwriting criteria in and of itself that would affect either a seller's increased expense to close the transaction or the closing date. So make sure you take a look at that paragraph very carefully and make sure that the buyer and the seller do understand what their rights and how that works with notices and time frames. Thank you so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.